Okay, Brent from TradeGuild.blogspot.com, and it's May 30th. This is part 2 of our video for May 30th. We just looked at PRW, we looked at JDO, RBY, X, and the Qs. So I'm going to move along here to the next position that I'm in, and my portfolio is BPG. And BPG, you're probably starting to get used to seeing these divergences. This we traded this stock a couple times earlier in the year, made a lot of money. Here's the first one up there. It's a 78% move, and the second move, and we caught some of this too, that's a 172% move. So we made some pretty good money in BPG, and I'm back in it, and I'll show you why. Let's take a look at these divergences again. You can see price is coming down over here, the indicators in gear. The first hint of a divergence back here in November, price moved lower and lower, indicator moved higher and higher, and finally we got that break. Basically that's the daily time frame, so we don't really know how long this divergence is going to play out. That's why we look at the hourly. We get a little better feel from the hourly, and then we can try to narrow it down to the day or to a couple days with the 5-minute chart. So again, it pulled back, nice deep pullback, and this indicator didn't even pull back to the previous positive divergence. It moved up, so that was very, very strong move, and we saw a real just like a church steeple. I mean, it's just a rocket. So anyway, again, we have another deep pullback and another positive divergence in that indicator. So that's why I'm in BPG. I can show you some other time frames here real quick. Here's the hourly, and on the hourly, again, you can see one of these divergences that led to a move. Here's price coming down. Presumably, this indicator would be coming down below this level. Instead, it moved up, positive divergence there. Actually 2 in a row. Sometimes when you get 3 positive divergences in a row, you get a pretty reliable move. So anyway, we got a move. Everything was in gear. It didn't look like, it was a nice move, but I think what fell apart here is the indicator right in this area. I guess you can't complain. It's 200%. But you never want them to stop when they're flying like that. So anyway, you can see it falling apart there. Basically, when it pulled back down here, it just fell in line with the price. There was no positive divergences really. It started to move up a little in here, and in this area, it's starting to look pretty positive. Again, we have a low that's similar to the previous lows over here, and the indicator's moving up. So let me get rid of all this scribble. There's a 5-minute chart, and on a 5-minute chart, it looks like pullback time. Basically, it failed up here early today, and you can see why over here. The indicator's just nowhere near the same level, even though price is much higher, or a little bit higher, let's say, not much higher. Anyway, so we have a very negative divergence right there, suggesting there's probably going to be some more downside tomorrow. Let's take a look at the 1 minute. Let's take a look at a tick. Okay, tick actually doesn't look bad. Maybe this little pullback is done. There's positive divergence that led to the move today. There's the failure. And over here, it looks like this indicator is starting to move higher. So maybe that little pullback's done. I don't know. But over the long haul, I think BPG still looks like a good position. Clark, I'm just going to cover this real quick. I actually got out of this today for X, which in retrospect was probably not the brightest idea. It doesn't look really like a great short on the daily, and that's what I was in the position short. But on the hourly, you can see, this high over here is just really negative divergence there in the hourly. Here's the 5-minute, and you can see again a leading divergence to the downside, even though we got this gap up and price just kind of went sideways more or less. This indicator is just hauling butt down. So I think CLRK, if anybody's still in it, is still a very viable short position. And our final position in my portfolio anyway is MGRM. And again, look at the indicator here. You know, it didn't make it anywhere close to these previous highs. It didn't even really try. So this was a sucker's move right there. Some people got taken to the laundry on that one. But it's very interesting because this chart looks so bad on daily, and then you look at it hourly, and it's really shaping up in May. Basically, we have a very positive divergence in here, and it just keeps climbing and climbing. Let's take a look at a 5-minute chart real quick, and this is the last couple of days. And again, with 3C, we're looking at basically it's pretty much in gear. It's all in gear in this area. We get up here and you can see it start to crumble, see it start to fall apart as price kind of almost tests the highs, and this is just moving down. So you know, MGRM, maybe it pulls back a little bit, but this is still a very solid position in my opinion. So I'm hanging in with that one. So I'm going to show you something real quick. This is the blocks, which is affiliated with Telechart. Warden's making the charts for this blocks, and blocks is you got to check it out. It's a really interesting platform where you can basically become a programmer with very little time vested into it. You're connecting different block functions to create whatever tools you want, and Warden's used it to create charts. So anyway, one of the functions is Backscanner, and at the seminar I went to this weekend, they had this really neat thing that they showed called dueling backscanners. And basically what we have is a backscanner on this side and a backscanner on this side. So we have two backscanners that can go back and test our conditions. Let me just move this one to the results. And this is really cool, I think, a cool idea. Basically what we've done is taken two different well, actually three different theories of investing. One is buy and hold. Now, buy and hold is represented by this white line in the middle here. And basically, this is a 10-year chart. So what would happen is 10 years ago, you would buy all of the components of the NASDAQ 100. The only catch is it's the components that are in the NASDAQ 100 now. It's not necessarily the same components that would have been in the NASDAQ 100 then, but it's close enough for illustration. So you take $100 and you spread it out amongst all the components, and this white line, your money would be worth about $2,100 today. Okay, so on the left we have something called best of the best, and basically what that is you buy stocks that are in the top 20% of their industry group, okay? And their industry group is in the top 50% of all industry groups. So it's the best of the best. So any stock that's in the top 20% and its industry group is in the top 50%, you buy that stock and you hold it until it is no longer in the top 20 or the top 50%. On the other side, we have something called worst of the worst. Or, I'm sorry, worst of the best. And basically you're buying stocks that are in the bottom 20% of their industry, but their industry group is still in the top 50% of all industry groups. So you're buying on one side best of the best, on the other side worst of the best. The annual percent return for one is 24%, the annual percent return for the other is 38%. Now we know this is buy and hold, this white line. So guess which one's which here? Okay, I'm going to tell you. The green line, if you take your $100 10 years ago and buy the best of the best, is $500. The red line, the worst of the best, is $4,000. Go figure. Anyway, that's one of the neat things you can do with Backscanner. I'm going to put a link up to our site for Backscanner. You can check it out. Please tell them that you heard about them from Trade Guild. I'm going to be showing you some more things in videos to come. Thanks a lot, and I might have one more video. If not, good night.